On the evening of February 5th, 2018, a man typed the following words into Reddit. "I've lost $4 million, 3 years of work, and other people's money." Then he asked, "Should I kill myself?" Now, before you worry about him, he didn't. And the community, bless them, actually rallied around him. But that sentence tells you everything you need to know about what happened that afternoon. Because on February 5th, 2018, a product called XIV, a thing that thousands of ordinary retail investors had been treating like a free money machine, didn't just fall, it ceased to exist. 97% gone in an afternoon. Welcome to Wall Street's Fails, and today we are talking about Volmageddon. Let's start with the man. His Reddit username was Lil Kana. We don't know his real name, and honestly, that's probably for the best. What we do know is this: he started with $50,000, some savings from his time in the military, a small inheritance, and he had a strategy. He put everything into XIV. Over 3 years, that $50,000 became $4 million. $4 million. He was taking his family out to nice dinners. He was planning to buy his parents a holiday. He was talking to investors, friends, family members who had seen what he was doing and wanted a piece of it. He raised an additional $1.5 million from them. At the peak, he was managing $5.5 million. And his strategy had been right for 3 years straight. The amount of money he was making was, in his own words, ludicrous. Which brings us to XIV. 14 stood for the Velocity Shares Daily Inverse VIX Short-Term ETN, issued by Credit Suisse. It sounds like something an alien would call a sandwich, but the idea behind it was elegant, and that's what made it so seductive. The VIX is the volatility index, Wall Street's so-called fear gauge. When markets are calm, the VIX is low. When panic sets in, the VIX spikes. Historically, in the years leading up to 2018, markets had been eerily, almost unnervingly calm. The VIX spent months hovering in the low teens. XIV was designed to go up when the VIX went down. Short volatility, bet on calm, collect the premium. Every single quiet day, XIV generated a return. And here's the thing that made people go absolutely mad for it. Between 2011 and early 2018, the strategy worked beautifully. The S&P 500 was on one of the longest bull runs in history. Volatility stayed depressed. XIV went from around $10 at launch to over $140 by January 2018. If you had put $10,000 into XIV at launch, by January 2018, you had over $100,000. Without doing anything. Without picking stocks, without watching earnings calls. You just existed and collected. People on Reddit called it free money. There were entire subreddits dedicated to it. Front Trade XIV had 1,800 members. Respectable finance types published blog posts explaining the volatility risk premium and why shorting volatility was a legitimate strategy. YouTube channels made tutorials. There was a whole cottage industry of people explaining why XIV would keep going up. The VIX always reverts to the mean, they said. Calm always returns, they said. They were right. Until the day they weren't. The first week of February 2018 started badly for stocks. On February 2nd, a strong jobs report came out. Wages were rising faster than expected. Bond yields jumped. Investors started worrying about inflation, about the Federal Reserve raising interest rates faster than expected. The S&P 500 fell 2.1%, meaningful but orderly. The VIX moved from around 13 to around 17, still manageable. Monday, February 5th. The market opens. Things look shaky. By midday, the Dow is down several hundred points. Unpleasant but survivable. XIV holders are uncomfortable but not catastrophically so. And then, The last hour of trading. At around 3 in the afternoon, something began to happen in the VIX futures market. The volatility index, already elevated, started climbing. Fast. The daily rebalancing mechanism inside X4V required the fund to buy VIX futures to cover its short position whenever volatility rose. As the VIX climbed, X4V needed to buy more. As X4V bought more, the VIX climbed further. As the VIX climbed further, X4V needed to buy even more. A death spiral, mechanical, relentless, accelerating. By the time the futures market closed at 4:15 p.m. Eastern Time, the VIX had closed at 37.32. That was a gain of over 116% from the previous session's close. In a single day. The largest single-day percentage increase in the VIX ever recorded up to that point. At the end of regular trading, X4V was already down around 15%. Painful. Then the after-hours data started filtering through. The indicative value of X4V dropped to around $4.22. It had opened the day around $108. 96% gone. The threshold in X4D's prospectus was explicit. If the fund's value fell below 20% of the prior day's close in a single day, Credit Suisse could terminate it. The event triggered. The next morning, Credit Suisse announced that X4D would be liquidated. The last day of trading would be February 21, 2018. The product simply ceased to exist. Back on Reddit, the Trade 14 community was in freefall. Lil Kana posted his message that evening. $4 million, 3 years of work, gone. He had been so confident in the strategy that he had concentrated his entire position into 14. No hedges, no stops. Because for 3 years, 14 had never needed a stop. The amount of money I was making was ludicrous, he wrote. The past tense doing a lot of heavy lifting in that sentence. Other posters were surfacing with their own damage. One user on r/Wall Street Bets asked, in a title that has since become legendary, "Should I kill myself?" Posted on the evening of February 5, 2018. The replies that came back were genuinely supportive. Redditors, who are not always known for their sensitivity, told him he had built $4 million once and could do it again, that the skills were his, that the money was just money. He responded, "It's also extremely uplifting to be reassured by other people you don't even know on the internet." Meanwhile, SVXY, the ProShares equivalent of Orphein, lost 91%. VMAN, the REX ETF version, lost 87%. Combined, the inverse volatility products had held over $3.2 billion in assets as of February 2nd. By February 6th, most of that was simply gone. Some of those assets belonged to professional traders who knew exactly what they were doing and had accepted the risk. Many of them did not. In the weeks that followed, the post-mortems came flooding in. Journalists, analysts, academics, all trying to explain what had happened. The architecture of Orphein was always flawed, they said. The daily rebalancing mechanism made it a ticking clock in any severe volatility spike. The fund's own prospectus described the termination clause plainly. Nobody read the prospectus. Some traders had recognized the risk and stayed away. Others had looked at 6 straight years of performance and concluded that the risk was theoretical. Historical data suggested that a single-day move, large enough to trigger termination, was essentially impossible under normal conditions. February 5, 2018 was not normal conditions. Credit Suisse quietly collected its fees and walked away. Lil Kana went back to working. The Reddit community moved on to the next thing. And the VIX? It gradually calmed down over the following weeks. The very thing the Orphein traders had always been right about happened right after they were destroyed by it. Volatility did revert to the mean. The calm did return. Just a few weeks too late. Here is the part that I genuinely cannot stop thinking about. The 14th strategy worked for years. The people running it were not idiots. Lil Kana grew $50,000 into $4 million. That requires skill, patience, and discipline that most people simply do not have. The tragedy of Volmageddon is that everyone involved was right about the underlying idea. Volatility does decay over time. Short VIX has been a profitable strategy across decades. The problem was concentration. The problem was leverage. The problem was the assumption that because something bad had never happened, it could never happen. The 14 termination clause had always been there. In the prospectus, in plain language, describing exactly this scenario. Nobody took it seriously because it sounded like legal boilerplate. On February 5, 2018, $3.2 billion of boilerplate became very real. That is the story of Volmageddon, one of the most cinematic, technically fascinating, genuinely heartbreaking financial disasters in the history of Reddit finance. If you want more stories like this, subscribe. We do this every single day. Every single day there is a new trade, a new thesis, a new person who was right about everything except the one thing that destroyed them. And that one thing is always fascinating. Hit the subscribe button, turn on notifications. I'll see you tomorrow.